on the daily. I'll just drag it in. So here's where the market broke to the upside. This is late in November. Okay, let's get the exact date. And remember, what we're trying to do is prove to ourselves that we're going to have an opportunity to get in. Remember, the reason why we're afraid of things is because we don't deal with it rationally. Okay, again, this is not normally, I don't normally go through all of this, okay, so this is going to add to the time here, but you'll see how quick this really goes. So this is about the 22nd. Okay, so let's get this out of the way. We'll go here to the 22nd. 22nd. Look at this. Okay, so the market explodes to the upside. Then what happens? The market starts, it trades into what? A pennant pattern. The pennant pattern breaks. The market does retrace a bit. Again, any kind of prudent money management, you'd have to place your stops below these lows. So right down here. And look at this, 91.40, 91.20. I mean, come on, folks, 35 pips. Even on a day trade, that's a reasonable amount. So the market starts trading sideways again. So what do we have? Let's look at this whole pattern here, because this is where the break actually happened. So the market pushes up. You have a pennant pattern. So this was before the break. Remember, here's the 22nd. This very small bar right here. So the breakout actually occurred here. So let's say, hypothetically, that you were shorting, and you'd have a good reason to. Look at that. Look at all this resistance. So up until this point, you're thinking, man, this market looks like it's going down. Let me sell it because it looks like the likely direction is going down. Okay? And if we bring back in the daily at this point, you'd be looking at this. Resistance, resistance, resistance. You do have this aggressive uptrend going on here, but your market came down and is right back at resistance. So you've got a strong resistance level right here you're shorting against. Again, like I said, there were good reasons to go short. So then all of a sudden you're merely thinking, okay, the position's going against me a little bit, but wow, look at that. So this is what you're thinking to yourself. Oh, crap, I just got stopped out. Oh, man, what's going on? Now let's look at what happens here. Look at this pattern. This pattern is indicative. This means what? We have a possible trade. It's right there in front of your face. Now, you've got to be open to see this whole thing. And I've showed you in just a few seconds how, as this thing is trading along, and this is 3 o'clock in the afternoon Eastern time. So anywhere in the U.S. you'd be able to trade this. Anywhere, England you'd be maybe not, okay, but anywhere in the U.S. at a very reasonable hour, Australia at a fairly reasonable hour, you'd be just fine. Okay, so you are going to be able to trade this. Now look at this. Whoops. Okay, this did happen on a Friday. So Friday closes. This is 6 o'clock on Friday afternoon. Okay, let's say you missed all of this. Okay, you didn't want to take this pennant pattern. What does the market do on Sunday? The market pushes up, starts to trade down. Now we're into Monday. Okay, Monday morning. Look at this pattern here. What is this? There's the pole. Look at this. You've got a pennant, at the very least a triangle. Now what happens? So what are you looking for here? What you're looking for is that the market's either going to break to the downside, it's going to break to the upside. You don't know. Let me bring the daily back in. Where's all this happening? Right in here. So the market pushes up, screams to the upside. Actually, let me take this back. It's all happening. Still too high. Right in this area here. So the market is breaking out to the upside. And you're initially thinking, well, crap, I got stopped out. And remember, let me recap here. We're dealing with the anxiety. Traders are thinking, well, but what about, and you get caught up in the but what if, but this, but that, but.